Hey guys, welcome to today's video. This video, we will be discussing with you a profitable strategy that will help you maximize your wins in trading if you can use the tool correctly. This strategy that I'm about to share with you works on all financial markets like crypto, forex, and stock market. Please stay to the very end of this video because I'm going to walk you step by steps on how to use this strategy that I'm about to share with you. Please, before we start, remember to like, subscribe, and turn on the notifications bell to get notified when we upload a new video. So without any other delay, let's start. Firstly, we open our TradingView chart. Here on Ethereum USD on 1 hour time frame. For this strategy, we are going to use two indicators. To add these indicators to our chart, we navigate to the indicators search bar. And now we search for the first indicator, which is Bollinger Bands. Select this one made by TradingView. Before we add the second indicator to our chart, we will first tell you how this Bollinger Bands works. Also, before we talk on how it works, let's set the indicator for clear appearance. So let's go to the indicator setting. On input setting, set the length to 20. Set the source to close, the STD dev to 2, and the offset to -3. Then go to style setting. Uncheck the basis line. Set the upper line color to white and increase the line for clearer view in the chart. Also set the lower line color to yellow and increase the line. After that, press OK. Now let's talk on how this indicator works. Bollinger Bands, this indicator serve as a dynamic support and resistance. This indicator uses the upper and lower line as support and resistance, and sometimes signaling us when to buy or sell in the market. As you can see in the chart, when the price touches the upper line, it comes back to touch the lower line. Notice that when price bounces off the upper line, which is the resistance line, you can enter a trade setting your stop loss above the upper line. You'll take profit to the next low. And if you have missed short trade here, you can enter this long trade here when price bounces off the lower line, which is support line, setting your stop loss below the line, and you'll take profit to the next high. Also, this indicator basically tells us when the market is quiet or loud. When the market is quiet, the bands contract, and when the market is loud, the bands expand. For instance, when market was quiet, the band started moving in a choppy way. When price was loud, the band expanded and was moving in a straight way. Now that we know how the first indicator works, so let's add the second indicator. Then we go over to the indicators search bar and we are going to search for Stochastic. Select this one made by TradingView. Then go to setting of the indicator to modify the setting of the indicator. On the input setting of the indicator, we set length to 20. Set the K-small to 10, and then the D-small to 5. Then we set the upper band color to yellow and change the dotted line to straight line. Leave the middle line to its default. And set the lower band color to red and change the dotted line to straight line. Basically, the stochastic indicator helps us determine where a trend might be ending. By definition, a stochastic is an oscillator that measures overbought and oversold conditions in the market. This indicator has a scale from 0 to 100, which the yellow line is 80 and the red line is 20. This means that when it's overbought, the stochastic moving averages will be above the 80 level, which is the yellow line. And when price is oversold, the stochastic moving average will be below the 20 level, which is the red line. When the price is above 80 level, which means overbought, and the stochastic fast line, which is the blue line of the stochastic moving average, diverges the slow line, which is the orange line of the stochastic moving average. This signals us that trend is about to change, and this makes the opposite when price is on 20 level. For instance, seeing that price is above 80 level, suddenly the fast line crosses over the slow line, which signals us that trend is about to change. Then we can enter a trade targeting 4 to 8 risk to reward ratio. Knowing about this, let's show more examples to bring more life explanation of this strategy. For this example, we are using the pair of Ethereum USD on 4 hour time frame. Looking at the chart, we see that price is bouncing on the lower line of the Bollinger Band, and also remember that the lower of the band normally act as support. Then to check if this is the right time to enter this trade, we look at the stochastic. On checking the stochastic, we notice that the stochastic moving average is trading below the 20 level. and the fast line of the moving average has diverged the slow line, which signals us that trend has reversed. With this 3 confirmation, we can enter a trade immediately after the close of this bullish candle, setting your stop loss below the lower line of the Bollinger Bands, which serve as support, and our take profit to the next high. Let's look at another example of this strategy. Now on the same Ethereum USD pair on 1 hour time frame. Looking at your chart, you can see that price is bouncing on the lower line of the Bollinger Bands, which act as support. And on confirming that the stochastic moving average is below the 20 level and the fast line has already diverged the slow line. Then you can enter a trade after the close of the bullish candle, setting your stop loss below the low of the Bollinger Band and the take profit to the next high. Now let's look at an example on how you can enter trade on downtrend using this strategy. On looking at the stochastic, you notice that the moving averages is trading above the 80 level and the fast line has crossed the slow, which signals you that new trend is about to form. Then you can enter a trade immediately the close of the bearish candle, setting your stop loss above the Bollinger line and your take profit to the next low. Let's look at another example now on 4 hour time frame. Looking at our chart, you can see that price is bouncing on the upper Bollinger Bands, which serves as resistance. Then to confirm this trade, we look at stochastic to know if it is the right time to enter the trade. On checking it, we find out that the moving averages are above the 80 level, and also the fast line has crossed the slow line, which helps us to confirm the trade. Then we can enter a trade immediately after the close of the bearish candle, setting our stop loss above the Bollinger line and our take profit to the next low. As we come to the end of the video, try to share to us your questions on the comment section. We will be glad to give it our best answers. And also remember to like, subscribe and turn on the notification bell to get notified when we upload a new video. Thanks for watching, see you on our next video.